Hello, and thank you for joining RegTech Analyst. And today we're joined by Mahesh Patil and Laura Hadfield. And we're going to be discussing how Qkvin can help combat financial crime challenges, as well as the five C's: conversion, compliance, cost, continuity, and compatibility. But before we get into that, I'll let my participants introduce themselves. So passing over to you, Mahesh.
Thanks, James. Yeah, Mahesh Patil. I'm the CTO at DLT Apps. So I head up the product engineering and technology teams at DLT across various product propositions and servicing clients. Prior to DLT, I have about 20 plus years of experience as a technologist, strategizing, architecting, designing, and delivering solutions for various financial institutions, as well as retail and other industries as well. Fun fact: I worked across US, UK, and India, so I've got a holistic, like global experience as well. One of my reasons for joining DLT was to help bring innovation to financial institutions, and I felt after having worked in a corporate career for a long time, this felt like the right way to bring innovation to big financial institutions, because a lot of financial institutions honestly struggle with a lot of legacy, and that's what we will, I'm sure, come multiple times during this interview. So very happy to be here. We are here mostly focused on the Qkvin product proposition, which is our KYC AML solution that also I look after from product and engineering standpoint. Thank you.
Perfect, thank you. And Laura, would you like to introduce yourself?
Sure. Thank you, James. And just thank you for having us. So I'm Laura and I'm the AML SME at DLT Apps, and I'm passionate about preventing and mitigating the social and economic harm of financial crime. So I've worked in many roles across the AML space, and I have extensive experience in enhanced due diligence and transaction monitoring. And I'm currently lending my expertise to the development of Qkvin and combining my compliance knowledge and breadth of user experience to help develop a robust platform, streamlining the user approach for financial crime end-to-end processing.
Perfect, thank you very much. And so diving straight into the interview. So could you just start off by giving a brief context about Qkvin and sort of where the company started, its mission, and where, that light bulb spark that led to its creation?
Sure. So the team at DLT Apps has collectively over 100 years of expertise working in the major financial institutions, and our experience across those organizations has brought to light for us the fact that there were many challenges on the road to compliance, from having disparate solutions to address the different aspects of regulatory compliance to a lack of flexibility to modifying policies and keeping pace with evolving regulations. The legacy systems are also hard to migrate and modernize. And so the further shrinking talent pool also needs constant retraining as well. And all of this indicated to us that there was a clear need for a comprehensive AML compliance solution.
Okay, perfect. Thank you. Mahesh, would you like to go over some of the main challenges the team came across in the market?
Yeah, certainly. I mean, DLT itself is what, 3+ years old, I guess. I mean, in general, 5 years, but more actively in the past 3 years. And Qkvin was probably one of the first few ideas as part of our inception. I think we wanted to build, because digital identity and anti-money laundering and compliance space is quite dear to us. Most of the products we built, I think what we've based on our collective experience within financial institutions, we see problems across what I call as the 5 Cs, and you probably alluded to that before as well. So the 5 Cs, basically, the first one stands for conversion. I think when most organizations try to, and this is true not just financial institutions, outside of financial services as well, but when big organizations try to adopt new technology, they have an issue with their internal and external audiences trying to adopt any new platforms and solutions, and primarily because there's a lot of learning curve for their internal teams, operational teams who are going to use the solution, as well as for end users, because as soon as you launch a new offering or a product or modernize a solution, there is always implications to end users and how they access their accounts, how they the various touch points they have with the institution. So the conversion and adoption is typically one of the main concerns that big financial institutions have. The second C is for cost, and it's the cost of implementation. Clearly, most financial institutions spend millions and hundreds of millions at times to get onto modern products and propositions. But it's not just the implementation cost, but also the long-term operational cost of adopting a solution, making changes to the processes, and implications of the level of automation that these solutions bring that they need to consider, and that's what also is always at the back of their mind. The third C is for continuity of service. So basically, when you're moving from a product or a solution to a new version or a new platform or a new product, one of the big challenges they face is the continuity of service. So what happens to the end user's experience, or to the service they're utilizing in the interim as they are migrating onto the new product and proposition. And especially within regulated industries, you can't let people. I can't be locked out of my bank account, say, for weeks because my bank is migrating from one solution to the other. So that's critical to any sort of movement or migration of product and solution. So that's the third, which is continuity of service. The fourth C is compliance, and compliance, obviously, being financial being a regulated industry, compliance is obviously something that is continuous, and all organizations have to make sure, no matter what product or platform they utilize, meets all the regulatory requirements. And again, this is not a target. It is something that has to happen continuously. So when they're moving on from one product, solution, or service to another, that's another thing to bear in mind, is to how is their compliance process going to change, or what is going to be the implications of adopting a new solution. And lastly, it's the compatibility or the ability to integrate with their existing ecosystem. A lot of the banks, financial institutions, wealth and asset management institutions, they have multiple, tens, if not hundreds, of systems within their enterprise. And whenever they're trying to adopt a new solution, what they need to always, what they're worried about is how it can integrate into their existing ecosystem. Are there any systems that they may have to retire or move on as part of this process? So those 5 C's are what, as I say, I think stops them, or impacts their decision of whether they would be moving to whether they should adopt a new technology or not.
Perfect. And yeah, thank you for the insight into the 5 C's, and diving a little into them. The first one you mentioned there was conversion and that adoption. So how does Qkvin's approach to onboarding improve the collaboration and confidence within compliance teams? And how does it facilitate a frictionless experience with new members?
As Mahesh was just alluding to, conversion and adoption are critical to ensuring seamless compliance processes. Qkvin tackles these through guided workflows, which make it easy for users to collaborate and onboard these clients quickly and easily. And through providing configurable workflows and intuitive interfaces, Qkvin is able to eliminate these information silos, promote communication, and equip compliance teams with tools for effective case management.
What Laura, just one more thing to add. So I think what Laura talked about there was the impact to internal audience in terms of conversion and adoption. There's also the other side of, because most of our solutions are B2B, so we sell to businesses who then have end user customers using the platform. There's also the impact to the end user. So I was on one of these projects, I think, long ago, where one of our clients had limited the amount of functionality that was enabled on the solution to be able to service registration processes, so registration failures. And guess what? The biggest problem our users had when we launched was registration, and they had no way or ability, or very limited ability, to be able to service those users. So one of the things that we've always strived for as part of DLT is to make sure that the end user, it's not just the internal audiences, but the end user as well, how they use the solution, how do we make it seamless for them, as well as enable different types of integrations. So with Qkvin, for example, we also allow not just a web-based interface for onboarding, but also have an API-enabled solution for our customers to then integrate into their onboarding solution that they may already have in place. So we provide multiple different approaches to sort of tackle the customer experience problem. So it makes it easier for them to adopt our solution, and sort of lowers change if as much as possible.
Perfect, thank you. And so the key theme there is sort of simplicity. So how does Qkvin help to streamline the sort of compliance processes for financial institutions?
Sure. So we're able to address compliance challenges through automating regulatory findings and generating comprehensive reports. So using real-time monitoring and tailored rules, Qkvin is able to enable continuous compliance with global regulations. It also enables quick adoption of evolving regulations using customizable policies that are allowing the user to enable the compliance processes to be future-proof in light of those changes. Moreover, seamless integrations with internal and external systems enable real-time insights, which are really key and able to streamline checks.
Perfect, thank you. And one of those 5Cs was that idea of continuous monitoring, and the past couple of years have shown how quickly sanction lists can change in the blink of an eye. So can firms really afford to have those periodic assessment processes for compliance? Or is that continuous monitoring of watch lists or sanctions or anything like that the only route forward, really?
Absolutely. Qkvin is built with, as Laura mentioned earlier, it's a configurable solution. So we do not just do onboard upfront checks during onboarding, but also allows our clients, our customers rather, to be able to do ongoing monitoring. PEPs and sanctions is just an example. There's ongoing transaction monitoring, changes related to customer, or customer life cycle. There are changes with their, addresses, name changes, and various kinds of events that occur. And Qkvin is constantly looking after those and enabling, caseworkers to be able to make decisions based on those changes and conditions. Yeah.
Perfect, thank you. And obviously, cost is a major challenge for financial institutions, especially as budgets sort of tighten in the sort of current market. How does Qkvin's automation and machine learning capabilities help to drive efficiency and tangible returns on investment for financial institutions?
When it comes to cost and efficiency, I think the biggest, the most obvious answer you hear within the industry's use of AI and machine learning. And of course, Qkvin does leverage artificial intelligence and machine learning, but it also focuses on some basic automation as well. A lot of prospects and clients we speak to, and also there's a lot of research out there from various other providers, which obviously clearly articulate the biggest problem challenge within this industry or within compliance is a lot of the checks are still manual. There are many organizations still perform KYB, KYC manually, looking through actual details across various different feeds, and there are very few solutions that aggregate all of that information together and perform automated decisioning. There's also various restrictions across different jurisdictions and different constraints that have been due to the lack of centralized company registries and so on and so forth. So the way Qkvin tackles it is through multiple areas. So we use machine learning and automation, obviously, for risk evaluations and screening. We consolidate all the data and it goes through our own machine learning models to then identify the risk profile that a customer falls into. We also look at anomaly detection, and we've got various different machine learning models that we use to identify anomalies, let's say within, transactions or over the time behaviors of customers. We are also adopting generative AI in certain areas to be able to help caseworkers and operational teams to be able to generate reports and write provide evidence is required to support any regulatory reporting. Again, these are just some areas. There's lots to do in this space, and we are continuously evolving. But the idea is to bring as much as possible optimization to the day-to-day work that ops teams are working on.
Great, thank you. And let's now move on to sort of the continuity of experience and service. And so how does Qkvin ensure smooth transitions and operational stability through the automated migration process?
Sure. So at Qkvin, we recognize the challenges that are associated with migrations and address them through automated migration processes. So by leveraging innovative solutions of Terra AI, we simplify migrations, reduce costs, and minimize operational disruptions. Our config over code approach ensures repeatability and consistency across multiple migration attempts, thus instilling confidence in organizations and enabling them to navigate these transitions with ease. We can get you up and running within weeks with a small but agile team equipped with these automated migrations.
One of the recent examples is the TSB migration, I think back in 2019, where a lot of customers lost access when they migrated over their accounts from Lloyd's Bank, I think. And that is, I guess, within the financial services is a big alarm bell, I would say. But as we are building with products within DLT, we are almost shifting left the process of thinking about migration. We are looking at migration upfront whilst we are building the product. A lot of times organizations look at it when they are ready to onboard or start use a product. But because Qkvin is built with migrations in mind, and with the use of Terra AI, this automated solution is going to help onboard our customers within weeks, not months, and probably and also improve the repeatability and reduce the amount of errors, as Laura was saying.
Perfect, thank you. And then sort of moving on to the final C, compatibility. How does Qkvin's modern API enabled technology ensure the seamless integration with existing systems and workflows?
Yeah, this I think is the biggest pain point that most big organizations face, and I've alluded to use the legacy processes, legacy teams, legacy technologies, various different aspects of legacy within large organizations. I was on a project a few years ago where we were building a modern system on top of their legacy systems almost, and the use case itself was exposing very small set of data points related to a customer, and that itself, from idea to launch of the MVP of that solution, was roughly 18 to 24 months. So 2 years roughly to launch a small use case, and primarily because of the complexity of the legacy systems and the processes and timing of the changes. So what we are doing with Qkvin is and this is true with most of our products as well, is we built with composable architecture and open APIs in mind upfront, which means if any bank or financial institution, wealth and asset manager wants to use our product, they would have readily available APIs, well-defined contracts to be able to integrate their systems. We understand that every company that we would be using our product would have some sort of a customer relationship management system, some form of a transaction system, a ledger, and many other systems they would want to integrate with. And Qkvin itself integrates with multiple third parties, which is a growing list of adopters that we have. So at the crux, basically, because of the use of composable architecture, we can actually plug and play and decide what makes sense in what areas, what clients, and what jurisdictions, and be able to provide that flexible API layer, so they can then integrate and provide an end-to-end cohesive solution for our customers, making their job easy as they move on from their incumbent system onto a platform like Qkvin.
Perfect, thank you. And so how would you comprehensively sum up the benefits that financial institutions can expect to receive from using Qkvin?
Sure. So I think we've talked through a lot of different benefits that Qkvin is offering, but some of the key ones would be streamlining onboarding, enhanced compliance, reducing operational costs, faster decision making, and being able to perform those dynamic risk assessments. With Qkvin, we're able to optimize resource allocation and maximize productivity and profitability using our intelligent automation.
Perfect. And then one final question. Why should a financial institution work with Qkvin?
Amazing question, James. I think with Qkvin, it's all under the DLT umbrella. From my perspective, and obviously I can speak to the rest of the DLT team, we are looking for long-term partnerships. We are not just, obviously there's technology out there, there are lots of products and solutions out there, some which cover parts of the solution that we offer. We've only seen very few solutions out that actually can perform everything that Qkvin can do. We've got certain, differentiators as we've talked to. So firstly, the use of functionality like guided workflows that help teams adopt a solution like Qkvin easily. We've got the automated migrations, which is not something that clearly many solutions offer. We've thought through migrations upfront rather than being after the effect, so it makes the journey of our clients easier. We also have, obviously, our AI, ML, and automation just goes without saying. I don't even need to mention that at all. But we've also got certain features which are, I would say, in some ways groundbreaking. So we are also looking to enable the concept of sharing of data and identity across multiple departments and institutions. That is a feature that has been built within Qkvin. We will be experimenting with various clients and slowly rolling that out as well. To me, I think that is a big differentiator, I guess, longer term, because as of today, every time you open an account, you have to provide the same documents over and over again. With this concept of shared identity, we can enable this concept of sharing, which allows investors or banking users or clients to be able to do their KYC once and be able to sort of leverage that at least as long as their situations haven't changed. But I mean, aside from all of that, as I said, we're looking for long-term partnership, and we're here not just for the sake of technology, but to make as I said earlier, to bring some innovation to this space. So if you're looking for clients who are trying to, I guess, bring in product optimizations and profitability within their organization and improve how their people work, basically.
Perfect, thank you. And they're all the questions that I've got. So I'd just like to thank you both for speaking to me today and going over the 5 C's and how Qkvin's helping overcome the challenges in financial crime.
Thank you very much.
Thank you, James. Yeah, it was lovely to speak to you, and also to the rest of the RegTech team. Yeah.